Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the joint venture chapter. Now this is video number 4, and in this video we are going to see the third method of joint venture, that is called memorandum method, right? So in the previous videos we have seen the concept of joint venture. In the second video we solved one problem, and in the third video also we have solved another problem, right? And we have seen two methods of joint venture already, okay, in the previous videos. Now in this video, as I said, we are going to see the third method of joint venture, that is called memorandum method. Yeah, so now let's have a brief idea about this method, and then we are going to solve problem with this method. Yes, so see here, let's say there are two people, Nikhil and Binoy. Okay, now these two people, they want to come together for a small project, and they want to work together for a certain period of time. Okay, so for that they don't want to form a partnership, a conventional partnership. They don't want to form that. Okay, what they want to do is they want to work together only for a certain period of time and for a certain thing. So that's why what they're going to do is they are going to form this temporary partnership, which is called joint venture. What is it? A temporary partnership. Okay, that is what is joint venture is, right? It's not partnership. So what the parties of joint venture are called? The parties of joint venture, or the members of joint venture, this Nikhil and Binoy, they are not called partners, because this is not conventional partnership. No, here the parties or the members are called co-venturers. Okay, Nikhil is co-venturer of Binoy and Binoy is co-venturer of Nikhil. In partnership, how you call it? Nikhil is partner of Binoy and Binoy is partner of Nikhil. The same way, Nikhil is the co-venturer of Binoy and Binoy is the co-venturer of Nikhil. Simple as that. Now here what we are concerned about is, here we are concerned about the accounting, right? How the accounting is going to be done. Yeah, that's what we are seeing over here. Yeah, joint venture memorandum method. Yes, so see here, what is going to happen is, in this method, both the parties, yeah, they are going to prepare their own books. Okay, Nikhil in his own books, in the books of Nikhil, he is going to open an account that is called joint venture with Binoy account, because Binoy is his co-venturer. So joint venture with co-venturer account. Okay, so joint venture with Binoy, and in this account Nikhil is going to record each and every transaction that is done by Nikhil, by him. Okay, and the Binoy will also do the same thing. What the Binoy will do? In the books of Binoy, he is going to open an account that is called joint venture with Nikhil account, joint venture with co-venturer, and in this account Binoy is going to record each and every transaction that is done by him, by Binoy. Okay, so by now I think you have understood that here what is happening, accounting is done partially. Yeah, accounting of this business, this joint venture, partially is done in the books of Nikhil and partially in the books of Binoy. Why? How? Because see here, the transaction which are only done by Nikhil are recorded over here, and the transaction which are done only by Binoy are recorded over here. So of course the accounting is done here partially. That's a problem. Why is it a problem? Because if you have only half of the transaction, yeah, then you wouldn't be able to calculate the profit or loss made by this joint venture. Binoy cannot calculate, only with this information, only with this data, he cannot calculate the profit or loss made by this business, this joint venture. And same with the Nikhil also. Nikhil cannot calculate the true correct profit or loss made by this joint venture with only this data, because they have only half of the information. What are the transaction that is done by Nikhil? Nikhil has that, and what all transaction done by Binoy? Binoy has that. Okay, so to overcome this problem, what happens is, a periodic statements are sent. Nikhil will send a periodic statement what he has done to Binoy, and Binoy will send a periodic statement to Nikhil what transaction he has done for this business. Okay, so that they can be in loop of each other. Okay, they can know what is happening with the transactions, right? So then what will happen when Binoy will get the periodic statement? What is he going to do? He is going to prepare an account that is called as Memorandum Joint Venture Account. Okay, he is going to take that periodic statement which he received from Nikhil, and with this account which he has prepared, joint venture with Nikhil account, yeah, with these two things, periodic statement and his joint venture with Nikhil account, he is going to prepare this Memorandum Joint Venture Account. Now what is that periodic statement? Periodic statement is nothing but the exact carbon copy of this. Okay. Now from the point of view of Nikhil, what is going to happen? Nikhil is going to get periodic statement from Binoy. Now what is that periodic statement? Carbon copy of joint venture with Nikhil. Okay. It's the account only. Okay, just in a vertical form. It will be just in a form of statement, right? So that statement, and with their own account, what they are going to do, each of the parties, each of the co-venturers, they are going to prepare a memorandum joint venture account to calculate the profit or loss made by this joint venture. Okay, so now how are they going to prepare this memorandum joint venture account? It's very simple. Okay, what they're going to do, with their own account and the statement, they are going to combine those two together and prepare the memorandum joint venture account. Now forget about the statement, think about that, Nikhil is sending his own account to Binoy. Okay, so simple thing that is going to happen is, what all expenses are there in this account, expenses, yeah, what all things are there, just take it over here, and income, what all things are there, take it over here. You got memorandum joint venture account. It's very simple. Memorandum joint venture account doesn't follow the methodology of double entry. Okay, this is just a dummy account that is prepared by each of the parties to calculate the profit or loss. That's it. Okay, that's the basic mission of this memorandum joint venture account. There will be no journal entries, nothing in this memorandum joint venture account. No, nothing. Only this dummy account is prepared, this ledger account, to only calculate the profit or loss. If the balance comes on the debit side, it's profit. If the balance comes on the credit side, it's loss. And that profit or loss is going to be shared among the parties of joint venture, right? The co-venturer. Yeah, whatever profit sharing ratio they have, in that ratio it is going to be shared. Okay, and it's going to be reflected in these accounts. Okay, right? So that is what is going to be happening. So once we solve the problem, you will understand it's very easy. So the basic thing is, these two accounts are going to be combined together to prepare this memorandum joint venture account. Okay, simple. So now let's solve one problem and you will understand how easy it is. Okay, now here we have the problem. See the question over here. Two friends, Nikhil and Binoy, decide to undertake a joint venture to manufacture and sell a product. Nikhil will be responsible for manufacturing and Binoy for selling, with profits to be shared 60% to Nikhil and 40% to Binoy. Now they have given us the profit sharing ratio between the co-venturers, Nikhil and Binoy, 60% to Nikhil and 40% to Binoy. Alright. Then they have given us the transactions of Nikhil and Binoy. The first, we have got Nikhil's transactions. Nikhil has supplied materials of rupees 3,200 to the joint venture. Yes, so first he had to purchase those raw materials, right? So that's an expense for him. And then he has also paid wages of rupees 4,000. Yes, these two transactions are there of Nikhil. And then we have got Binoy's transaction. See here, Binoy has paid selling expenses of rupees 2,400 and wages of 5,000 also he has paid. And then he has made sales also. See here, revenue 26,000. He has made sales of 26,000. Who? Binoy. Right. So this is the question here. It's a very simple question, very few transactions. Yeah. So it's a perfect problem to start off with the memorandum method, right? And then they have said, see here, they have asked us to prepare joint venture with Binoy account in the books of Nikhil and joint venture with Nikhil account in the books of Binoy. Yes, that's what we do, right? And then we have to prepare the memorandum joint venture account. Yes. So simple problem. Let's solve this problem. Now let's solve this problem. See, the first account that you have to prepare is the memorandum joint venture account. It's very simple. See here, why memorandum joint venture account is prepared? It is prepared to calculate the profit or loss made by the joint venture. Clear? Yes. Now, why is it called memorandum joint venture? Because this account doesn't agree with the double entry. It doesn't follow the methodology of double entry. Okay, debit and credit, it doesn't do that. So this is just a working note that is prepared to calculate the profit or loss. Simple? Yes, it's just a rough working note. So now, how do we prepare this memorandum joint venture account? It's very simple. Just take all the transactions of all the co-venturers, now take all the expenses over here and all the income over here, and if the balance comes, balancing figure, if it comes on the debit side, it's profit. If it comes on the credit side, it's loss. That's how you prepare the memorandum joint venture account. Expense, incomes, if balance comes over here, profit. If balance comes over here, loss. Simple. That's how you do it. If you see properly, memorandum joint venture account is actually a combination of these two accounts. okay, joint venture with Binoy account and joint venture with nickel account. It's a combination, okay, because in joint venture with Binoy account, what do we take? We take all the transactions of nickel, and in joint venture with nickel account, we take all the transactions of Binoy. Yes, and then what is memorandum joint venture account? Combination of all the transactions. So combination of these two accounts. Okay, we'll come to that. So first let's do this account. See here, first take the nickel transactions. Yeah, see the expenses over here, nickel expenses. He has supplied materials of rupees 3,200, two goods supplied 3,200. Expense, right? It's an expense. Okay, and then nickel has paid wages of rupees 4,000. That's also an expense. Two wages expense 4,000. These two are nickel expenses you have got over here, right? And then come to Binoy. Binoy has paid selling expenses and wages of 5,000 and selling expenses of 2,400. To wages expense paid by Binoy 5,000, to selling expense paid by Binoy 2,400. Simple. You have taken all the transactions now. Yes, all the expenses. You are left with now revenue. Revenue, the sales which were made by Binoy of rupees 26,000. Now this is income which will come over here. Clear? By sales proceeds. What is revenue? Sales, right? So sales proceeds 26,000. Clear? Now you have to see where does the balance comes. Now 26,000 is, it looks bigger because this is small figures, right? These are small figures. So credit side is bigger. So 26,000 on both the sides, and just balance it out. See here, 26,000 minus all these figures, minus 3,200, and then minus 4,000, minus 5,000, and then what you have got, minus 2,400. So that's equal to 11,400. 11,400 is the balancing figure on the debit side. So that's profit. Okay, and we know the profit sharing ratio, 60% and 40%, 60% to nickel and 40% to Binoy. Just share it among the co-venturers. Yeah, 11,400 into 0.60, that's 60%, right? So 6,840 goes to nickel, and then the remaining minus 11,400, or you can take the percentage also. So that's equal to 4,560. So 4,560 will go to Binoy. Clear? 60%, 40%. Yes. So you are done with the memorandum joint venture account. You took all the transactions and the balancing figure. That's the profit or loss. Simple. Yes. Then what you have to do is you have to prepare the joint venture with Binoy account in the books of nickel. So in the books of nickel, joint venture with Binoy account. Now how do you prepare this account? Now this is a proper account, okay? This is a dummy account. This is not a real account. This is a dummy account. But now this one is a proper account, okay? Yes, this account is not based on any journal entry or anything. This memorandum joint venture is just a rough working note. But this account is based on proper journal entries, and then this account is prepared. Yeah, but in exam mostly the journal entries are not asked. Directly you have to prepare the ledger accounts, right? So see here, how will you prepare this account? You have to take all the expenses over here, all the income over here. All right. So see here, nickel has supplied materials, right? Now here in this account, in the books of nickel is preparing this account. Yes, joint venture with Binoy. Yes, Binoy is co-venture of nickel. Yes, now in this account, all the transactions of nickel is recorded, right? So see here, we have two transactions of nickel. Nickel has supplied materials of rupees 3,200. Now first nickel had to purchase these materials, right? So that will hit purchases account of nickel. Okay, so to purchases account 3,200. Clear? Yes. Then nickel has paid wages. How did he pay wages? He paid wages through bank or cash. So to cash 4,000. It's an expense, right? Expense. It will come on the debit side. Okay, this account will get debited and these items are getting credited. Okay, to cash. Simple? Yes. And then the main thing is, now you have to transfer this profits. Okay, so nickel profit is 6,840. So you have to take that directly here. Now you will be confused now. What are you doing over here? This is on the debit side and you're directly taking it over here also on the debit side. Now we haven't seen that. We have seen that in lots of chapters. Whatever chapters we have seen, it's always cross postings, right? If it is debited, we will credit over here. If it is credited, we will debit over here, like that. But see, that's the thing I was telling you. Memorandum joint venture account doesn't follow debit or credit. It's just, a dummy account. So that's why it's just a carbon copy of these two accounts. Alright, so that's why whatever that is there on the debit side, you will find it on the debit side over here. Yes, see here, 4,000, 4,000, 3,200, 3,200. Yeah, wages supplied, that's wages. Simple. I mean, goods supplied, wages. Yeah, so that's the thing. This account doesn't follow double entry. It's just a carbon copy of these two accounts combined. Okay, yes, so that's what you have to transfer the profit of Nikhil to his account here, to profit and loss. Okay, it's profit 6,840, and then you have to balance this account. All right, now the balancing figure will be the final settlement that has to be done among the co-venturers. See here, what you have to do is, see, joint venture with Binoy account, you have taken the purchases, the cash, and then profit also from this. Yeah, that's what you have to do, the memorandum joint venture account first. Otherwise you cannot close this account, because you need profit or loss made by the joint venture here to close this account. All right, yes. So then what you're going to do, you are going to balance this account, right? So now here we don't have anything till now. Yeah, we just have these three numbers here. Yes, these three figures. So just balance it out. 3,200 plus 4,000, 3,200. Yeah, add it up. 3,200 plus 4,000 plus what, 6,840. That is equal to 14,040, right? 14,040 on both the sides, and then we can see 14,040 is the balancing figure on the credit side. It means that now Binoy will get, not Binoy, Nikhil. I mean Nikhil will get money from Binoy. Okay, clear? This is the balancing figure, the final settlement that will be made among the co-venturers. Understood? Then you have to prepare the next account in the books of Binoy. Yeah, joint venture with Nikhil account. So see here, joint venture with Nikhil account in the books of Binoy. Now here Binoy is preparing this account, so all the transactions of Binoy will be recorded over here. Now what are the transactions of Binoy? See here, Binoy has got three transactions. He has paid selling expenses of rupees 2,400, and he has paid wages of rupees 5,000, and he has made sales of rupees 26,000, right? Three transactions. So just take it. Yeah, we take all the expenses over here and all the income over here in this joint venture account, right? Joint venture with Nikhil account, and we know all the Binoy's transaction will come over here. Yes, so the first transaction is selling expenses. He has paid the selling expenses either through cash or bank. Okay, we assume it's cash, so to cash, selling expenses 2,400, and then he has paid wages, to cash again 5,000. Yeah, and then you have to transfer the profit, same as how you did in this here joint venture with Binoy account also, right? Here in the books of Nikhil, how do you take the profit? Nikhil's profit 6,840. Yes, here all the Binoy things are recorded, so you have to take the Binoy's profit over here. So Binoy's profit is how much? 4,560. So take that 4,560 to profit or loss, it's profit. Yes, then what you have to do, third transaction is there, right? Revenue 26,000. Yes, the sales, so take that. Now revenue income, where will it come? It will come on the credit side. Buy cash 26,000. Yeah, sales, simple. So till now you have got these three figures on the debit side and one figure on the credit side. Now balance this account, simple. Credit side is bigger, right? So 26,000 on both the sides, and then go on deducting these three figures, 2,400, 5,000 and 4,560. 26,000, see here, 26,000 minus 2,400 minus 5,000 minus 4,560, that is equal to 14,040. Okay, 14,040, right? So that's the balancing figure to cash. That's the final settlement that will be made among the co-venturers. Yeah, now you have to understand this properly. The first thing that you did was prepared the memorandum joint venture account, found out the profit or loss, which is going to be, posted on the same side, debit side only. If it's loss, credit side only. Okay, that's how you have to go about that. Yes, and then you open these accounts. Yeah, in the books of Nikhil, what you're going to do, joint venture with other co-venture account. Yes, that's how you would take it, and then you take all the transactions of Nikhil here, and here all the transactions of Binoy, and take the profits or loss, whatever that is there, and then what any balancing figure comes, that will go to cash account. Okay, why it goes to cash account? Because there will be settlement that has to be done among the co-venturers. One will have to pay to another. Okay, here what is happening, see here, balancing figure in the books of Binoy, it is coming on the debit side. It's coming on the debit side. So that means Binoy has to pay to the other co-venturer. Okay, and here the balancing figure comes on the credit side. That means, you know, Nikhil has to receive the cash from Binoy. All right, and the figure will be same. See here, 14,040, 14,040. Yeah, same, right? Yes. So that means now Binoy has to pay to Nikhil here. Clear? I will write it down. See here, here it is received, here it is paid. All right, clear? So this is how you have to do it. It's very simple. Prepare the memorandum joint venture account and then these accounts. And if you see, these are exact copy. See here, 3,200, 4,000, 3,200, 4,000, and then see here, 2,400, 5,000, 2,400, 5,000. You see all the expenses of all the co-venturers and sales proceeds. See, that's the transaction, right? 26,000, 26,000. You see, but then the extra thing is what? The final settlements. Final settlement. That's why we prepared these accounts, you know, because we can find out the balancing figure. That's the final settlement made between the co-venturers. Clear? Easy? All right.